Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. Hey, welcome back to the show. So last week I shared a bit about profit versus cash flow, right? I shared the difference between those two things. And I wanted to provide an example because recently I actually had this happen with a client where I have a client who's an 8-figure business and they actually almost didn't make payroll. And this is a really interesting cautionary tale because here's the weird thing about this. The business is actually super, super profitable. They have a very, very high margin offer. This is a service-based business. And what ended up happening was we hit this point where we essentially had to draw on a line of credit in order to fund the bank account so we could make payroll on time. But I'm going to tell you how we got there and how the client reacted to realizing this. And by the way, this is all just a message to share with you to say this can happen to you, this can happen to anyone. Okay. So you're not just in the clear when you hit 7 figures or 8 figures. You're not just like, oh, well, I no longer have these problems. No, you have these problems in a greater magnitude because now you have, in this case, 25 plus employees. They're going to go without payroll. This is a big effing deal. And it's a bigger deal the bigger you are. So if you can understand the concept of this, of how we got here and avoid it, then this is probably one of the biggest blessings you can have is to learn from the mistakes and learn from the oversights of other people. And I'm going to explain how this happened and why the client really didn't do anything wrong. We didn't do anything wrong, but how a blind spot really led us here. So in this particular case, the client has been operating, number one, they were operating with a monthly cash flow forecast. And if you heard my episode last week around cash flow forecasting, I really encourage weekly cash flow forecasting because when you are operating where there's a lot of activity in your bank account and you're running payrolls maybe multiple times a month and you have a lot of money in payroll, the timing of that payroll matters because you could be wiping out half of or all of your bank account in that payroll. So committing to paying credit card bills or committing to investing in other things on the same week that you run a payroll could be dire if you're not collecting at a pace that matches that. And this is the second thing is that they were invoicing a lot of their revenue on 30-day payment terms, but they weren't really enforcing collections. So what ended up happening was there would be these stack of invoices that were overdue. The revenue was booked, meaning it was declared as revenue. And from a visibility standpoint, they see that their business is profitable and that they're converting customers really quickly. But the money wasn't in the bank account because they weren't collecting at the velocity that they were selling. So there was a bottleneck in the collection side. This is a really important thing to look out for in your business. If you're not doing like a swipe the card to order, if you are actually collecting payment after your service is delivered or as a separate invoicing process, you have got to have a process. And I'm telling you, if you have a person whose job this is, it's worth it because to accelerate cash flow, you need to be collecting your money. You need to be chasing down overdue invoices. And they weren't doing that, at least not as strictly as they could be. And that was going lax. So we had lower collection velocity. We had payroll that was overly committed. And here's how I word this. You can't be expected to keep your promises to your employees and to your creditors and to your vendors. You're expected to keep promises to them. You need to expect the same promises to be kept to you. And you can't tolerate any less than the level of keeping of promises, the level of reliability that you demonstrate. So you have got to hold your customers accountable to paying you on time. And you have to build things in your process to ensure that they do. And a few people can slip through the cracks, but you need to make sure that you have a protocol in place on how to handle those. That is one of the biggest blessings your business can have if you fall into this trap. Hey, did you know that you can actually see my face and watch this episode on YouTube? If you're not already subscribed to our YouTube channel, make sure you head over there and you subscribe and check out all of the guest episodes along with some of my solos. We're posting every single week on YouTube. See you there. So, we talked about the collections flow. So, we needed to accelerate how they were collecting. We needed to make sure that the payroll could run steadily. The payroll was an ongoing commitment every 2 weeks or every other week, I should say. Every other week payroll, but we're not collecting every single week from these invoices. We have to chase them down. We also had really large invoice payments in big chunks. So if one person, I call this kind of over reliance on certain invoices, if one customer didn't pay us, then that sent our whole cash flow to shit because we're talking about six-figure invoice payments. If we're missing like 180, 200, $300,000 in invoice payments, like that's a big deal to our bank account. Like we can't be taking a gamble that we may or may not collect a couple hundred grand. So that was big too, was chunking the invoices into large amounts where made it harder for the customer to pay us because they needed to have that capital available. But it also kept us waiting with bated breath to find out what our fate would be every week and if we'd be able to run payroll based on who actually paid. So this created a whole negative cycle. And when we came in to this client, we revamped the collections process. We did weekly cash flow forecasting and we started working with this client to make sure that we had complete pulse on the follow-up cycle with these customers. We had a really clear understanding of where the money was and what was supposed to be coming in. We did temperature checks on how, the collections would come in and when, based on how many times we'd followed up and what responses we got. And then we also really kept an eye on those payroll commitments and made sure that we weren't paying any other large payment commitments in the same week as payroll. Okay. So all of these things kind of added together summed up to a better cash flow management cycle. And that's what you need to take away from this is how can you manage your cash flow better even when you can't control the behaviors of others like our customers. Our customers still don't pay on time all the time, but we have protocols in place to handle that. We have late fees. We have incentives. We also have a follow-up and escalation process where we have administrative people who are calling these customers regularly, and then they escalate to me, the CFO, to call and follow up. These are all key processes we need to have in order to make sure that we're collecting our money on time, but we're not hassling the client. It's a delicate balance. So I would encourage you, when you look at your cash flow, understand that even the biggest companies, the biggest businesses, the most successful and even profitable businesses can be making these core fundamental mistakes that have a massive impact and a massive shockwave through the company when not done at an optimal level. So keep that in mind as you look at your systems and processes and make sure you're positioning yourself well to never be in that situation. So, profitability is one thing, but cash flow is what truly keeps your business running smoothly. It's not just about how much you make, it's about how much you can actually use to sustain and grow and maintain that cash in your control. When you book a power session with me, we can take a look at your payment cycles, your transaction timing, and your personal cash needs to make sure you're staying ahead of the curve. Managing cash flow is a constant process, but one of the most important pieces of the puzzle for a successful business. Find out more information about a power session with me to do your cash flow forecast in the show notes.